Wow, that is Wednesday on Wealth. And I'm Nisha Harji. I'm the equity head at Fintoo. The current topic is market outlook for the month of April. The financial year FY 21-22 has been an eventful year for the equity markets and various other asset classes. The Nifty has delivered close to 19% return in FY 22 and has risen from 14,690 to a high of 18,600 on the back of easy monetary policy and a strong recovery in corporate earnings. In FY 22, Brent crude oil futures moved from a low of $64 a barrel to a high of $140 a barrel. March 2022 was an eventful year for the markets as despite multiple headwinds, the Nifty delivered a return of 4%, the Nifty mid-cap index delivered a return of 5.2%, and the small cap index delivered a return of 6%, outperforming others. So now, the main question is, why is Nifty at 18,000 despite all the headwinds? So, if you recollect, on the previous instance, that is in January when the Nifty was at 18,000, was when the crude was at $75 and when there was no war in the world and when Fed was supposed to increase rates in a measured manner and there was no large concern around inflation. But now, with all these factors in play, the Nifty is almost back to its previous high. So clearly the momentum is very positive on the back of liquidity flows, expected truce between the Russia and European front, and a correction in commodities including crude. As the new financial year has kicked off, the market is building in optimism on the upcoming result season and the management commentary for the entire year, even as the signs of margin pressure are clearly evident. The fund flow from both the domestic and institutional investors is expected to set the market trend for this month. Volatility is also expected to continue until the geopolitical tensions between Russia and Ukraine completely subside. For now, the markets are placed at a critical juncture with Nifty comfortably placed above the 200-day moving average of 17,100. However, the grey clouds are still in the background and we believe the next few quarters will be difficult for the global economies as well as India due to the disruptions brought in by the sanctions on Russia. The new world order may build up and the ruble could emerge as an important trade currency as gas imports are critical for Europe. The discounts that we expect to get in crude oil will bring down the overall cost of the crude oil basket, but we need to see the political consequences of the same. Our stakes are high, and at the same time, US and Europe can't afford to isolate or pull up India. It is a developing situation and it is difficult to assess how it will play out. However, India is expected to emerge as an important player as the US-Russia Cold War moves to the next phase, and that could benefit all of us. But in the short term, we could face some uncertainties. So coming to the markets, Nifty has pulled back a bit from its recent highs of 18,100, but any decline in the market is unlikely to pose any serious threat to the current trend reversal as long as India VIX trades below the 22% mark. And with RBI policy lined up for this Friday, we expect volatility to prevail. On the sector front, we expect commodity-driven sectors to trigger profit booking, while service sector is expected to gain momentum. With daily turnover now consistently above the rupees 75,000 crore mark, the Nifty is poised for an extension of the current up move towards the 19,000 level. Thank you for watching our video. I hope you liked it. For any queries, you can contact our experts, and for more such videos, subscribe to our channel.